Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, November 29th. Got a lot to go over today, so definitely run your video player at 1.25 or even 1.5x to get through it. I'm not sure how long this is going to take, but I think given Friday's action, it's going to be worth it. So let's dive in. Taking a look at equity. Taking a look at futures, equities are up 1%. Bitcoin bouncing back 5.6%. Copper's up 1.65%. Gold is up a half. Silver's up 1%. And oil's getting a big bounce as well at 5%. Over on the macro front, we don't have a whole lot. Pending home sales and Dallas Fed manufacturing. So let's just talk about Friday. Day after Thanksgiving, half-day session, nobody home. What I mean by that is that there was very low liquidity on Friday, and what that does is it takes a lot less volume to move the market around than say a regular day. So once the algos and traders started that sell-off, there weren't as many people there to buy. So the thing we have to decide is, was this a one-day wonder or more pain to come? And I want to show you a bunch of different charts that kind of give a picture of how we might want to trade it or position for it. So let's dive into it. Not going to spend a lot of time here. US dollar, uptrend, little corrective action on Friday with yields plunging back down to 1.5%. I think that's going to be an important thing to watch over the next couple days. A lot of support here. You can see that was a support level before. We tagged it, we broke it, we reclaimed it. Now we're back down to it. If this breaks and heads a lot lower, that inflation trade, reopening trade will probably get hurt. If it's stabilizes here and moves back up, then all the high risk, high valuation names have trouble. So in the middle here, I don't think we can really tell. I think it's going to be driven off the COVID headlines. And if if today or tomorrow they come out and say, oh, well, yeah, it is a new variant, but we don't see it as more contagious or deadly or however you want to characterize it. Different structure. The existing vaccines work against it. We're not gonna have a situation where, oh my God, back to square one. I don't think that's gonna happen, but it may take some chop in between Friday, when, oh my God, we got a new variant, to the all clear signal when everybody's, they release the lockdowns. Health officials come out and say it's no worse than Delta, but just a little bit different, that kind of thing. So, and that'll all be reflected in rates. TLT. Of course, if rates dive, TLT will do a moonshot. And so from a technical standpoint, you've got a nice pivot here at 149. Here's your first target on the upside, 150, 150. And if they roll it over, I haven't drawn it in here, but there's a pretty good gap there where if traders kind of dismiss this new COVID variant, you'd probably see rates go back up again, and then of course TLT move down. So you've got a gap below and a target above. That's something, even if you're not trading it, to get an idea what rates are doing, and then you know that correlation between rates and the different asset classes out there. We have been focusing on the VIX. We said you don't want to see this much over 20 because that would open the door to the next level. That's exactly what happened. We impulsively broke out. We broke out above 25, and now we're sitting at over 28 right down in here. So in past events, those are reversal points. Let's look at it. So here was a 28, and here was a 28, and this is up at 30, but that's where that line comes from. So at these levels, I don't think the high VIX is gonna be sustainable. Could we go higher and push above 30? Yeah, but I think that's going to make it even more of a time to fade it or cash in puts if you have them. So let's watch this. A move back down below 27.50 is going to be really bullish, because then you can pull back all the way to 25 and then get into this gap again. And if you saw that, you would most likely see a lot of reversals in your stocks from down to up. So, got some important developments on the oscillators. Let's take a look. Here's the NYSE down at negative 70. Anybody who was short right now is on borrowed time. What do I mean by that? Can this go lower? Sure it can. We had a what is this? A 90 reading back here. We had a couple in 2020 back here. But you can see all across the board that this is a pretty good time to expect a bounce. It's, you know, and I've learned through the years, and trust me, you don't want to fight NYMO. This rubber band is stretched to the downside, and what I think we're going to see is some kind of a healthy bounce, and then we decide, are we going to get short? Reload shorts? Because right now, you certainly don't want to be adding puts right here, right now, because you're on borrowed time. And if that snapback reversal does happen, I mean, it'll hit you real bad. So be careful about a bunch of puts. I'm talking at the index level, because that's what this reflects. If you've got a stock that's, obviously in free fall or giving you sell signals, you can take those on a tactical basis. What I'm referring to here is it's not a panic moment as far as your long portfolio. I don't think you need to close all that stuff, because I think we're at least going to get a bounce here. And you can see on the Nasdaq oscillator, we're down here at 61. Again, could we go into the 70s? Yeah, possible, but not probable. I'm going to show you a little data series right now. I don't often show these, not because they're a secret, but because, I like to post things, at least when it's close to actionable level. So what we're looking at here is percent of mid-cap stocks above the 20 EMA. And you can see when it reaches the upper band, often a reversal point, and the same can be true down here at current levels where you'd expect a bounce. And so that's what I'm expecting. Moving on through the other segments, this is the Nasdaq, not quite as far along, but pretty far down. I mean, this still has some room to go, I would say, but not a lot of room. So if we get the Nasdaq down in this area, say today, IWM and large caps work, but tech doesn't, this will continue to come down. So we're going to have to wait and see. A couple more here. Yeah, small caps almost to the reversal zone. You can see all the reactions along the line that this is often a place where you get a turnaround. And lastly, here it is for the SPY. Oversold, get long, overbought, exit, maybe not get short, but expect a reversal when you got 85% of stocks over their 20. That's not a place to be wholesale piling it in. So what's my point here again? If you look across our market segments, carving up SPY to large caps, mid caps, and small caps, they're all pretty much extended to the downside. And Nasdaq as well probably has more room to go lower, but be careful about putting on big duration type positions. All right, moving on to SPY. Here's a 2-hour chart. I've marked the gap for you. We took a long look down to 458, where we had 2 candles touch it and then put in a little, a tiny baby bounce. So today, I think anything north of 458, you can be bullish. And then if and when price comes up to 264, that would be also a buy point, because we had quite a bit of support here and we had a touch here. So broken support becomes resistance. And so if it can make a push above 464, then I think there's a really good chance for a gap fill up to 469. Looking at the 30-minute chart, we had the initial move lower, we had a bounce, and then back down here. So again, I think 458 is your pivot, and here's some little intermediate levels. But I think given we're up 1% already, we may open right on the gap level. And then the question is it a gap up and go, or is it a gap up and get rejected at the bottom of the gap from Friday? The Qs, 2-hour, move down, little bear flag, comes down here and tags 390. I think that's your pivot for today. And I think if they break that, they're going to come down to the 50 EMA on the daily. And if that happens, I would be a buyer there if it made it that far today, definitely. But if it holds the line here, I think you're going to be a buyer at 394 and look for a bounce into this gap. What I've done here on the Qs is pencil in a hypothetical bear flag, and you can do that on the other charts. I didn't do it across the board, but just to give you an idea, first leg down, impulsive, little kickback rally, doesn't go anywhere, into resistance, looks like a bear flag. Where's the measured move? You take this distance and you add it to the top of the flag, and that's what I've done. And then so the measured move target is 385. Does that mean we're going there to tag that level? No. But if this breaks at 390.50, the low, let's just call it 390 because I think that was the low. Yeah, 389.77. If you see price break that, then I think you'll see a fast move down to 387. May hesitate there, but then come on down. So that's what it looks like to me. But, we'll have to see if that 390 and a half level breaks, and then we can look for lower prices. I wanted to show you IWM daily because I've been tracking it pretty close. Nice breakout, back test, but then it failed on Friday. And so now we've got a big gap above, and we've got IWM at the midpoint of this big consolidation range. From a technical standpoint, the target right now is the bottom of the box, right? Break out of a zone, comes back for a back test that failed, and then you're down back in the prior trading range. Whenever that happens, your technical target is the far side of the box. Now, we do have a big layer of support right here at 222, and that was a number that we were frustrated with back here because price was going through it almost every other day. So it stopped it for quite a while until we got this breakout here. So today, I think you want to key off 222 and also mark where the 200 comes in, because that would be another place where buyers could step in. So taking it down a little lower, here's the pullback, here's the rug pull, found support at 221. Now, I think this morning, I think your pivot's 224. If it can do that and get up into the gap at 226, then there's a good chance for a bigger bounce and to move to close that that gap. I'll show you the 30-minute chart here. So you can see the big gap and then have it finding support at 220 and putting in a bounce. So, and this was a gap that got filled on Friday. So that won't be there in the future. But I think if you can, if we see a move above, then that can become your stop, on the gap open, if you will. All right. Facebook. Support layer, support layer, support layer, support layer. Stopped on a dime at 334. So I think that's your pivot for today, with the knowledge also that you got a decent sized gap above. So key off 334. Apple 60-minute came back to the breakout level, held, which is a good thing. So now, from a technical standpoint, what we've got is a breakout and a back test. And it'll be really important to see if 157 holds, because if it doesn't, you're going to roll down here to 155, 154 area, and then possibly all the way back to this 150, 150, depending on what's going on in the market. But right now, breakout back test, I think you can trade off of 157. Tesla, little gap down, found support at this 1080 line. Support, resistance. So now 1080 becomes your key pivot point for today. If it breaks below, 1050 comes up real fast, and then possibly 1020 if the market really starts to fall apart. Microsoft Daily, you can see we've had a bear cross on PPO. We broke trend on RSI, back down to 50%. Notice the void between 330 and 305, right? Almost nobody home. I think if you get a break below 330, you can be short with a first target at the 50. But if that doesn't hold, then probably going to go all the way back to 305. But first things first, 330 is support because it was tested here on the low, and back here it was resistance. So now you trade off at 330. As long as it holds, we can go higher. But if it falls and gets into the 329s, then chances or odds are favored to come down and tag the 50, and then that'll be another place for a potential bounce. Here it is on the 60-minute chart. Again, this looks a lot like a bear flag to me, with the next leg down starting, and here's that prior support right back here at 329.25. So pretty clean chart, not a lot of head fakes. So I think using this level as your pivot today is going to be the right call. Amazon, same structure. Impulsive move down, little bear flag rally, and I've marked the measured move target down here at 3,400. So today, I think you can use 3,500 as your pivot. I want to show you. Here it is on the daily. Remember that 35.54 level was our, or 52, 35.52 was our breakout level, and we're currently $50 below that. So in some respects, and we had a double top, in some respects it's similar to the IWM chart, where price had broken out of the trading range. This is where we all thought it was going to 4,000 plus, got held up at 37.50, had the double top, pulled back, but now we're back into the range again. So on a technical basis, favors a move down towards at least the midpoint of the box, if not the whole amount. So I think Amazon's on watch here because you got to get that over 35.50 to say to yourself and to potentially recognize momentum fueled overshoot in a low liquidity holiday environment. This could be just a simple undercut on momentum, and then see if buyers come back in. And if you see this morning a move back above 35.50, I think you can get long there, and I think that trade would go really, really well. But it's got to do that first. Otherwise, you've got the 50 coming in at 34. Yeah, 34.50. So that's that one. Google, same structure. Sell off, baby bounce, gap down. I've added the measured move down to 28.10. Yeah. So today I'll be keying off of 28.40. As long as it can hold that, then there's a chance for a bounce back into the gap resistance, and then above 28.90, you can either add or roll up your calls for a potential gap fill up here to 29.25. Netflix, same thing. I think if you get a break below 660, you can be short down to 645, and then a potential break for lower prices. I think this morning you just key off 665. If it can hold it and bounce, I think you can get to 575. You get a breakout there, then we're going back to 685. So the lines are pretty clear on this one. Semiconductors down, A, B, C. If price drops down below this trend line support, then I think we go down to 295 and then 292 below. On the bull side, if they can reclaim 302.50, come back up here, break out, I think you can run up to 306 where the gap starts. A couple trade ideas for you. American Express broke out here back in mid-May, came up, came back to test the breakout, which held numerous times, get the bounce off, and now we're right back to the key support with the 200 right there with it. So, really key spot. Support is support until broken. I've got the little scenarios here. Bulls get the benefit of the doubt because price is either at or a little above support. But if it breaks, I think you got $10 of downside right out of the gate, and potentially a lot more. So on the upside, you've got almost, let's call it 8 to the gap, and then up to 172. So that's 1250 on the upside, or even a little more. Yeah, more like 15. 15 on 157 is 172.50. So I think that would be your upside target. So make a long story short, I think there's a good trade here either way to be long against 157.50 and the 200, which I think will hold, or if it doesn't, you get a move lower. And if you think about it, I haven't had it drawn this way, but this is a bracket trade, right? You mark the high and the low of the day when it gapped down, and then you follow price. So that's that setup. Because of COVID, all the reopening stuff got slammed. Here's an example. Caribbean Cruise Lines sitting here at 20, or excuse me, it's down here. Sitting here at 18. Last line of support. So I think it's a binary trade. It either holds 18 and tries to fill the gap of $2, or it fails and then starts rolling over big time. If, for instance, they say, yeah, we got a new variant and it's much more contagious and causing a lot of hospitalizations, the next thing you'll see is cruise lines canceling reservations, or the CDC making them do that. So this is an important one from the standpoint it's right on the line. So I think there's going to be a trade right out of the gate this morning. And of course, you can run through and look at Royal Caribbean, RCL, Norwegian Cruise Lines, NCLH. You can look at Marriott. You can look at Hilton. You can look at Expedia. You can look at Booking Holdings. That travel cyclical trade. If those all break lower, then you know what I'm saying, COVID fears are probably increasing. So let's do a quick recap. I know it's been a long video, ton of stuff to go over. There's still going to be COVID headlines, whether positive or negative. The market will react to that. But from a technical standpoint, we are stretched already to the downside, and I would be expecting a reversal either today or tomorrow. In fact, it might even be nice to get one last panic move lower, right? So they open it up with a 1% bounce, and then the bears come in and just slam it this morning and send it down. And then, right as everybody is giving up, closing out longs, loading up on puts, and then they rip your face off. So I think this is a tricky little scenario because we don't know which way it's going to really break. And remember, one of the things that I like to do that I think will be helpful to you, especially on a day like today, find the pre-market low and find the pre-market high. Very good chance that we get this 1% pre-market pop, and then it goes right back to the low point on futures, or to come back and test Friday's close. So don't get all carried away, loading up on everything, because they may just give us a head fake higher and then make that big impulsive third leg lower. So be cautious today, but I think there's a ton of stuff there to trade. So I'm going to wrap it up there. Long video. Hope you found the content useful. If you're new to the channel and you see value in the work, please hit the subscribe button and the alarm bell. And then go over in the show notes. There's a link to register to become part of the team. That way you'll get all my midday updates, trade ideas, stuff like that sent right to your email box. So have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.